Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to go through the Forex Friday market wrap. We're going to go over the news this week. We're also going to go through the charts that we looked at in the week ahead analysis and how they have played out. So, starting off with the news then. There was lots of data this week, but the headlines really for us were Fed Chairman Powell testifying. In these, as he was testifying, he talked about that the Fed were looking at increasing the rate at which they taper. So we know that that's potentially coming to fight the rise in inflation in the US, as well as potential hikes in the near future. But I think they're going to try and basically increase the rate at which they taper first, see how that plays out with the inflation rate, and then we'll see how that goes from there. We also saw some Aussie GDP data. We saw a decline in the GDP data, although this is in green. Doesn't mean that it's positive, because it was at 0.7% before. Now we're at a minus 1.9% figure here. So showing us that the Australian dollar economy, or the Australian economy, is not that great at the moment, and essentially is still pretty bearish, which is what we kind of talked about this week in terms of risk anyway. Wednesday was quite interesting because we did have quite a decent number out of the ADP non-farm employment change, which does usually kind of give us an insight to what could be coming up for NFP. However, NFP missed by quite a significant number. So we saw what we was forecast to be 553,000. We actually saw quite a significant drop to 210,000. The average hourly earnings went down to 0.3%, and unemployment, however, did decline to 4.2%. So there was a slight positive in this NFP report. However, average hourly earnings fell, and non-farm employment change showed that the jobs number also fell for last month. Now that basically means that the jobs that were created, this 210,000 jobs that were created, were of lower quality. Okay. Now, what was interesting as well, though, we did get a revision to 546,000. So maybe that was what's kept the dollar semi sort of bullish at the moment, because we'll check out the chart in a second. We'll show you how the market reacted to this news. It then followed at 3 p.m. with some ISM services PMI data, which was positive. So the market's a bit range bound, and we'll have a little look at that now for the US dollar. With regards to COVID news, just quickly, there wasn't too many headlines. There were a couple of headlines in terms of the fact that we had the first case in the US of the new COVID variant appear. So there was some travel restrictions being talked about in the US. So there is a slight sort of concern in the market surrounding the new COVID variant. However, the headlines were fairly sort of non-existent this week in terms of those headlines. However, we are going to see that the market did remain semi-risk off. So jumping onto the dollar index chart, you can see that we've got the weekly and the 4 hour. You can see that the market has mainly remained range bound. Just through here, you can see by the price action. Now, what we were looking at this week was some potential downside in the market. Seasonally, throughout December, the dollar usually underperforms, and we usually see some kind of pullback, which would fit in with the narrative here that the market is in a strong upward trend, but could be pulling back into previous structure highs to continue that trend. So that kind of fits that movement there, and that's what I'm going to continue to look for. Obviously, this is the jobs data here, and obviously you can see that the market hasn't really formed a direction off of it. We've just kind of remained pretty range bound. So I think next week's going to be pretty important for the US dollar. Hopefully we'll see some kind of clear direction, and we'll see the opportunity to potentially trade that pullback move. Going on to dollar yen. So dollar yen for us was one to watch due to the risk factors in the market. When there is high risk or uncertainty in the market, the yen usually performs pretty well, and we were again kind of looking at the fact that the seasonals for the dollar were bearish. Yen could be getting stronger because of the fundamental factors in the market, and we did kind of see some downside. It wasn't anything of sort of amazing in terms of the amount of movement of pips. It wasn't anything impulsive. We did again remain largely range bound, but what we did discuss was if price came back into 113.80, that we could see some sellers at this point, which we did eventually see. We just didn't really see that major follow through, but I think as long as the risk remains in the market, we could still see some downside, and the targets around about 111.70 to 112 could remain the same here, and we could see some further downside. Going back to Kiwi yen. So Kiwi yen was another chart to watch this week. The New Zealand dollar's been pretty weak. It's the weakest on the strength meter. Again, in a risk off sentiment market, the likes of the New Zealand yen would continue to fall, and that's what we had this week. Price broke below last week's low. It traded back up towards kind of these highs here, and then we started to see a significant sell-off in the market. And once again, if that risk does remain, I would think that the Kiwi yen would continue on its path lower, maybe into this sort of 75 area. Finally then, so the chart that you just had a little sneak peek look at was the crude oil, because this is what we looked at the start of the week. We talked about further downside in this market as well, as crude oil prices would be coming under pressure, especially if those headlines risks remained. And despite us not really seeing too much in the way of that, we did see another significant drop out of WTI. However, it has kind of recovered after retesting this sort of $64 level, which is where we kind of found buyers in this original run up through there. So started to see a little bit of buying coming back in at the moment. Maybe this is just a bit of a relief before we see a continuation, but I imagine a lot of the rallies in WTI now would be look to be sold off. What we may kind of see is maybe a head and shoulders pattern play out, maybe a move back up into the $75 area before seeing another decline in the market. So perhaps that could be something that we look into in next week's week ahead analysis video. So hope you enjoyed the content this week. I hope you learned a lot from it, and if you did, please leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex content, and I will speak to you next week.